Traditionally, if you wanted higher returns through a bet on gold, then instead of just buying the metal itself, you needed to buy gold miners. But there are various risks there. Operational issues are common in mining. Building a mine is incredibly expensive and time-consuming, and most mining companies ultimately fail because of how challenging the industry is. And those are just some of the issues. So the natural solution to this has been buying royalty companies instead. By owning gold royalties like Franco-Nevada has, for example, you get exposure to gold mines without dealing with most of these risks. At this point, the commodity royalty space has matured, so the returns likely won't be as great anymore. But there is another Capex-Light option I think more investors should take a look at. Abex Technologies, ticker ABXXF, is the parent company with approximately 90% ownership of the Abex Commodity Futures Exchange and Clearinghouse in Singapore. Exchanges represent an even better Capex-Light opportunity than royalties, because all the costs of building the exchange are behind them now. At this point, Abex just has to onboard more participants to trade, and they don't need to deploy any additional capital to buy more royalties and bet on whether a mine might produce gold or not. Abex launched the exchange in the summer of 2024, so they're still ramping up the exchange and onboarding more trading or clearing firms, and at this point they've launched LNG, carbon credit, and nickel sulfate futures contracts. Recently, they announced they would have 3 lithium carbonate contracts launched on March 7th, with delivery points in Singapore, Rotterdam, and Baltimore. Albemarle has agreed to onboard and trade its lithium on the exchange as the first approved lithium brand, and that company is the second largest producer of lithium in the world, so that's a great start. A large focus of Abex is on launching new battery metal or environmental contracts, but the next one after lithium will be gold. By investing in Abex, if their gold contract takes off, then we as investors benefit from the volatility in gold markets when contracts are traded on the exchange. The more volatility in futures prices, the more contracts traded, and the more revenue an exchange makes. So Abex would offer some exposure to gold through changes in the price. The contract will be a combination of both a futures market and a spot market for gold kilo bars in Singapore. It has been mentioned that major bullion banks have told Abex they want to see similar markets created in New York after they launch this one in Asia. But for now, the first version will just be in Singapore. Unlike other contracts they've designed, gold is a market that's already dominated by large competitors. LNG, carbon credits, and nickel sulfate are all markets that lack any physically settled benchmark contracts. So there are already existing benchmark gold contracts with the COMEX in New York, owned by the CME Group, and the London Metals Exchange, LME, in the United Kingdom. The London markets typically serve as the spot market, where commodities stand for immediate delivery in the gold space, and meanwhile the COMEX dominates the futures market for gold. Having these two more separated markets has typically been fine in the past, but prices did start to diverge with supply chain disruptions during 2020, and changing policy like tariffs could lead to further differentials. This has led to growing interest for a centralized gold price, with both futures and spot markets located in the same place. And that's what Abex is setting up in Singapore. As I mentioned earlier, the CEO of Abex, Josh Crum, has talked about how bullion banks want a similar system in New York. So even with the COMEX already there, interest is starting to come in for Abex to create similar products abroad. Additional validation that the contract might get some legs is that Abex has a former chairman of the London Bullion Market Association, the LBMA, working with the company to design the futures contract and spot market, along with collaborating with market participants as the company has done when creating previous contracts. So there's a good chance Abex has confirmed that the market wants to trade what they're designing in the gold space. Now, in addition to the COMEX and the LME, there are also existing competitive gold contracts in the Asia region, particularly the Shanghai Futures Exchange, the SHFE, and the Shanghai Gold Exchange, the SGE in China, as well as the Tokyo Commodity Exchange in Japan. While China is difficult to get access to as a trader outside the country, there's a lot of restrictions there, Japan is certainly accessible. Point being, gold is a competitive market. So how does Abex hope to garner a foothold and gain market share? It's going to be primarily through technological innovations. I'm not going to explain incredibly in depth about how the technology works in this video. You can check out my write-up on Abex to read more about it, link in the description, and I've already explained it a few times, so I won't get into it again. But essentially what Abex hopes to do is to create what they call full digital title, FDT, by using blockchain technology. The technology that the company is developing will allow them to immediately transfer ownership of a commodity to the buyer, allowing for instantaneous trade settlement. As of right now, transactions in the financial and commodity space typically take days to settle. Even better, tracking everything through smart contracts in the blockchain eliminates the risk of fraudulent transactions, which has been an issue in the commodity industry because they've been slow to adapt to new technologies. Every gold bar will have a unique ID, which can be easily tracked to ensure that they are where people say they are. This also allows firms to use that gold as collateral, since every transaction is being tracked and verified and settling instantaneously. We could also see Apex allow firms to settle trades in gold instead of fiat currency if they wanted to, which is not a thing on any other exchange. And as a new exchange and clearinghouse, Apex can utilize technologies that other exchanges could not dream of using right now, since the company built their own tech stack just for that reason. So Abex's advantage over the incumbents is their location. Singapore and Asia at large has been the region driving demand for gold. And the other advantage is that they built the exchange from the ground up with technological progress in mind. Even if a market's already saturated with existing futures contract benchmarks, Apex might be able to make inroads through offering new technologies. Something else to take note of is that Apex recently established new offices in Hong Kong and Beijing. They did not do that just for shits and giggles. Chances are they will likely work with an exchange like the Shanghai Futures Exchange, for example, to offer cash-settled contracts and spreads based on the contracts offered within China. And as I mentioned, there's a variety of restrictions that make it difficult to trade futures products in China when you're outside of the country. So Singapore could act as a bit of an intermediary for trading firms. So new events to look out for over the next year are the lithium contract, which should launch soon, the gold contract and spot market, which should not be far away either. And after gold, it seems like the next contract coming up will likely be related to copper. And beyond those futures contracts, we also have the potential cash-settled contracts and spreads. Additionally, Apex could start offering third-party clearing services through its clearinghouse for existing exchanges. And there's also plans for Apex to elaborate further on their plans for full digital title and the technology development roadmap in 2025. While it is unclear how much market share Apex will ultimately capture with these efforts, the company has entered its growth stage. The network effects continue to grow as more clearing members are onboarded and trading firms start to use Apex contracts, slowly but surely. This is an investment we need to be patient with, as it takes time to build out these markets and attract liquidity. But the management team is experienced in doing just that, so I'm not all that worried about whether or not Apex will succeed. In my opinion, the main question is how long it will ultimately take. As I mentioned earlier in the video, I will link to my write-up on the company back from April 2024 over on Substack. You can check that out for more details, link in the description. Thanks for watching.